how are you affected by this market crisis? So guys, I just want to quickly bring this into a short, impactful video just so that you can understand and maybe relate in terms of real terms what this all means. So obviously we're seeing a mass sell-off across the stock indices globally, right? There's a lot of panic, a lot of fear. What has this been driven by, as we called back in January, and we said this was going to have an impact on the markets, was the coronavirus. The coronavirus has spread globally, and given that it's spreading, it is causing economic shutdowns, it's causing economies to feel the real squeeze. We are starting to see signs of slowdown, but it's still well within its infancy. No one really knows the full-on damages yet, not by any means. So what is driving the markets right now? It's all fear. Fear is spreading across the market. It's causing panic. So a lot of companies right now, they're taking these measures such as slashing jobs. We're seeing some big job cuts at the moment. Even some companies going under, so on and so forth. Now, again, as I say, this is driven by fear. Businesses are worried that, okay, during this time of crisis, people are going to be tightening up their pockets. They're not going to be going out, buying this goods, using this service, so on and so forth. So businesses are now, taking these measures and cutting jobs. What are we seeing at the moment from central banks? Central banks are trying to bring some stability, or at least cushion the blow. So what you're seeing is interest rate cuts. The first measure, interest rate cuts. What does this mean for you? Well, if you have a mortgage, or if you have any outstanding loans or credit card balances, the rates on those are coming down. Why is the central bank doing that? To try and free up some more cash, okay? Free up some more cash so you're not feeling too much the squeeze. Now, if you are being, if your costs are coming down thanks to the central bank, what does that mean? It means you're still going to go out and spend. Buy this good, go out shopping, use this service, so on and so forth, so that you keep trying to stimulate the economy, so we keep it afloat, so it doesn't just completely come crashing down. So these are the moves that we're seeing from central banks, and also, obviously, they're pumping money into the markets, they're buying bonds. So basically what they're doing is they're just giving this money to banks. Take this, we're going to buy your bonds, take this money, cheap money, go and lend it. Go and lend it to businesses now, because businesses are panicking. Businesses are cutting jobs. Go and give them this money to keep them stay afloat, so on and so forth, keep the jobs. Give this money to consumers. So consumers take this money, spend, stimulate the economy. This is now more than ever is when we need to print money, give this cash to consumers. Japan are looking at cash handouts. US are looking at cash handouts to people to try and keep the economy afloat. So people spend, stimulate the economy, keep businesses afloat, so on and so forth. You get the point, right? I've actually done some videos on this. Actually, if you check my YouTube, I've done videos on this explaining, just simple sort of economics. Now, with that being said, what you're seeing in the currency market as well is certain currencies are being devalued, right? Because when you are flooding the market with all this money, you're diluting, okay? So say, for example, the pound, or the euro, whatever the case may be. When you're printing more money, the currency is naturally being diluted. When it's more afloat, what happens to the value? It goes down, okay? It goes down. And you would have seen as well, there's a lot of flight into fixed income assets. People are like, where should I put my money? I want the cash, but also maybe I want bonds because I'm guaranteed a fixed income on that. But where there's so much demand for bonds, a guaranteed income, the yield on that bond is coming down and down across all maturities. People have gone out as far, to the 30-year bond, okay, 30 years, and the yields on those are just coming low. They're just less attractive now because there's so much demand. So I just wanted to bring that all in perspective for you, and how you're affected by the crisis. And I hope everyone stays safe, and I hope everyone, just holds on. I'm coming home. I don't even think that was the lyric correctly. But anyway, guys, other than that, that's it from me. Let's get it.